All right, guys, I'm here today with Carol Dols with Gateway Mortgage, and she is going to talk about the loan process and give you guys a little bit more insight as to what you might see from starting point to end point when purchasing a home. Carol, go ahead.
Thank you, Joe. I appreciate you having me on your show this morning.
Absolutely.
So the first thing your customers want to do when they reach out to you that they want to buy a house, you're going to say, have you been pre-qualified yet or pre-approved?
Okay.
So you want to send them to your preferably local lender. And what we're going to do is we could have them come and meet us in person or go on our website, which makes it a lot easier to get the process started.
Sure.
So once they contact us, we're going to, get their background, like what is it they're looking for, how much do they want to buy, what's their monthly budget. And when we determine those things, we're going to go ahead and get started on the pre-qualification. So the first thing we're going to do is we're going to pull credit. We preferably want to see a 600 credit score or greater. We can go as low as a 580. However, they're going to have a larger down payment and more assets as reserve.
Okay.
And of course, the rate is going to be higher.
If they've got the lower credit score.
If they've got the lower credit score.
That makes sense.
So the lower the score, the higher the interest rate. And it can be almost as much as a full 1%.
Okay, that's a big deal.
It's a big deal. So that's going to affect their monthly budget. And that's one thing I do try to work with the customer is, what is your budget? What do you foresee your house payment being?
Yes.
And that could be a big difference in what you're going to be out there looking for them.
Absolutely. And I'd like to throw it there too. I've worked with enough people. I'd like to tell you, and I'd like your input on this too. Before you go meet with your lender, do your own budget, right? Don't let a lender tell you what you can afford, because they're looking at bank ratios and what the average person does with their income. Maybe you like to go out to eat a lot and you can't give 40-50% of your income to your loan. You can only give 20 or 30, right? And she's going to tell you a bigger number. Don't let that dictate what you purchase. If you can only afford a $250,000 home, but you're approved for $350,000, go after the $250,000 and know you're comfortable with it. Would you agree with that?
Yeah, I would. And I also take it a little step further. I said, what is your monthly budget? If it's $1,500, I'm going to work the numbers backwards.
Yep, perfect.
And then I'm going to tell them exactly where they need to be, price range. They might come in thinking they're buying a $200,000 home, and they end up buying a $150,000 home.
Yep.
That can happen. Or it could be the reverse. You never know. But we do also look at those ratios as well. We'll get into that later.
Perfect.
However, when we're in the middle of the pre-qualification, like I said, we're going to pull that credit. Once we pull the credit, we're also going to look at their income. And that can be a variety of ways. We ask them, are you hourly? Are you salary? Are you a W-2 wage earner? Or are you self-employed? Just because they have been on their job maybe 6 months doesn't mean they can't buy a home. We always look for a 2-year job history, not necessarily 2 years on the same job, as long as there's an upward mobility with their employment. If there's a downward trend of mobility, like their pay is going down, that's going to be a problem.
Okay.
Especially with self-employed borrowers.
Yep.
They do have to be on the job 2 years. There's no getting around that. Sometimes they can be in the same field and be on the job 1 year as self-employed, but we still have to see a full year's tax returns.
Okay.
And we're always going to average the income of someone that's self-employed or someone that's commissioned. There's no getting around that as well. And some people don't understand that. But once we have determined their income, we've determined their budget, and we've pulled their credit, we're going to run them through what's called automated underwriting. We deal with Fannie Mae, Freddie Mac, FHA, VA, and USDA. And all of them use the same software. No matter where they go, we're all using the same software. And I always like to say, good data in gives you good data out.
Yes.
You want to make sure that you have a reputable loan officer that's putting in accurate, good data.
Yes. Yes.
Because sometimes your borrowers may come to you and say, oh yeah, I make $50,000 a year.
Yep.
And the loan officer just will input what they said. And then you get the pay stubs and the W-2s, and they might make $40,000 a year. So that's what I say when I say good data in means good data out. Once we've run it through automated underwriting and we have an approval, we're going to issue you that pre-qualification letter, which is normally good between 90 and 120 days.
Perfect.
So they got plenty of time to start looking for a home.
Yeah.
Okay? Worst case scenario, if that time runs out, we'll just re-pull credit and start the process all over again.
No big deal.
No big deal at all. So then when they're out, we get in touch with you right away when we get that letter out. And we're like, go buy a house. Go forth, and buy that house.
Yeah, and I want that letter as your realtor, because when you go put that offer in on that seller's home, they want to see that you've got something tangible that shows that you can perform. So that's what she's getting you. Carol's getting you a letter that says, yes, I as a professional have taken all that great data in, so you want to give her everything you have so that she can give you a stronger letter. That's a great
the more
point.
documentation they provide to us, including bank statements, the better. We also will ask them questions like, okay, you currently own a home and you're buying another home. What are you doing with the one that you're currently living in?
Yeah.
We want to know. Are you renting it? Are you going to sell it? Are you going to keep it and not rent it? All of that is factored into what we call the income debt to income ratio.
Yeah.
Okay, so then the next step is they get a contract. That's a great thing.
Woo!
Woohoo! Then we're going to take that pre-qualification into the full-blown application phase.
Okay.
At this phase, they're probably going to be giving us more documentation.
Yep.
The pre-qualification is just like a preliminary review. Now we want the full-blown, all questions asked.
Yep.
If you give us the bank statement and there are large deposits, we're always going to ask you, where did this money come from? I like to say anything over your current income that's deposited into your bank, anything over and above that, or sometimes it might be $1,000 or more that looks like it's a blank deposit, we're going to ask them where did that money come from?
Yes.
We actually play like detective throughout the process, I like to call it, because we're looking under a microscope all of your documentation that you gave us. We want to make sure if you deposited that money, where did it come from? If it's cash, we can't count it.
Yep.
That's just the bottom line. We will actually deduct it from their bank balance.
And give them a little insight as to like the why behind it. What are the regulators thinking about? What are they trying to protect?
The why behind it is you cannot borrow money unless it's from a secured source, such as a 401k, IRA, life insurance policy, or you have equity in another home. You can borrow it from that, but you cannot borrow it from a credit card. You cannot borrow it from a relative. It can be a gift from a relative.
Yep.
But we want to make sure that the funds that are used in this transaction are a legitimate source of funds, aka money laundering or fraud is never a good thing when buying a home.
That makes sense.
Never a good thing.
Yep.
So be kind to your lender when they start asking you for this documentation, because it can be a little bit frustrating because people just say, well, it's my money. But if you don't have it in the bank and you put cash in the bank, you're going to have to let that money season, we call it, which means sit in the bank for 60 days or more.
Yeah.
Sometimes you can get away with 30, but most lenders want to see it in there for 60 days or more.
Yeah.
Okay.
And I like to think about it like this. The bank isn't just, like, we like to think about it as a big brick building, but really it's full of people, right? And those people are trying to protect their big brick building, and they want to make sure that they can keep it. So when they're lending you that money, just like your mom would lend you money, your uncle would lend you money, your friend would lend you money, they want to know that you're going to make those payments
And
every
pay it
single
back.
month. Yeah. So if you get a big chunk of change from a friend or a relative, that doesn't really show me as someone who's giving you money that you can continue to do that, because that's probably a one-time thing. So wouldn't you say that that's a big reason behind why you're going to
Absolutely.
want to?
The last thing we want to do is take someone's home back.
Yep.
We're not in the business to take away. We're in the business to give. Okay. So then the next process is once the loan officer has taken that application, issued all of the proper disclosures, and there's a lot of timing that goes into that process, and it's called TRID rules. You'll hear this over and over again.
Yep.
Well, because of TRID, I can't do this or I can't do that. Everything has times. You cannot close within so many days of making application, and you cannot close within so many days of receiving your final figures.
Yes.
Everyone by law must have those final figures within 3 days of closing. So once we've issued those disclosures, it goes to another person in the ladder of the loan approval, let's just say. That's your loan processor. You want to be very friendly with your processor because she's the teammate of the loan officer that helps get that loan to the final phases. She's going to verify the employment. She's going to call the employer, make sure that person is actually employed there. She's going to go to a third-party source to verify the phone number. We can't just rely on the information that the customer's given us because of all the fraud that was committed years ago when we had the mortgage crisis, okay?
Yep.
So then the processor's gonna make sure they have all the bank statements, all the pay stubs, all the W-2s, the employment verification. She's gonna order the appraisal. She's gonna order the title. So there's a lot of other people that are involved in this process besides just the loan officer and the realtor. There's appraisers, inspectors, title companies, insurance agents. The list goes on, maybe a little bit more.
Yeah.
So then when the processor's gathered all of that documentation, she's going to submit it to what's called the underwriter. The infamous underwriter is someone that's going to take all of that documentation that's been gathered, and she's going to play major detective and go over it with a fine-tooth comb. She's going to make sure that the bank statements are legitimate bank statements.
Yep.
She's going to make sure the pay stubs are legitimate pay stubs. She's going to recalculate the income. She's going to re-verify that those balances are what's in that system that I told you about, the automated underwriting. Their job is to make sure that all of the data that was initially input is accurate to 100%. Okay? And I used to be an underwriter, so I kind of know how this works a little bit.
So that means you're a little bit better.
I'm a little bit better, yeah.
Okay,
I would like to say I'm a little bit better. But I pretty much have done every field in this business that there is to do. So when I do get my files, I am a little underwriting them pre before they even, it helps.
Yeah.
And it does help speed up the process.
Yep.
And then I can also explain to them why exactly we're asking for this.
Yeah.
So let's say the underwriter, she might come back and say, I'm going to approve this loan, but it's going to be conditionally approved. What that means is there's conditions. It could be an appraisal. It could be title. It could be insurance. It could also be, I want another pay stub.
Yeah.
It could also be, I don't like the way you calculated the income. I'm recalculating it a different way.
Yep.
It could also be, you might be a little bit short funds to close. Where's the funds coming from?
Yep.
Things like that. So then it goes back to the processor to get those conditions.
Yeah.
And then she's going to go back to the customer and say, Mr. Smith, I need an additional pay stub dated this day, or I need you to update your bank statement. We always want to make sure that that earnest money deposit that you gave your realtor was legitimate and cleared your bank.
Yeah.
Okay, so then when they get all of those conditions back, title, appraisal, all the other little miscellaneous items, it goes back to underwriting. And then the underwriter looks at it again and she blesses it finally and says, okay, everything's good. We are now clear to close.
Yep.
Yay.
Yeah.
Then when we get our clear to close, we're going to go back to the title company and say, we're ready to start issuing those final figures, which is our closing disclosure. This is one of those TRID required documents that must be given to the customer within 3 days of closing minimally, or you can't close.
Yep. You have to actually move the closing
date. You actually would have to move the closing date.
Yep.
We never want to do that at Gateway. Gateway, we close on time every time.
Yep.
You know, some things can happen. You know, I actually have one right now. The seller passed away. So now we're waiting for the title. I think it is something that they knew was inevitable because the property was in a trust. So they're just updating the trust and the title work, and then we'll be good to go.
Yeah.
Because we were clear to close, and he passed away in the middle of it.
And listen,
things happen.
What you want is someone on your team who's going to aggressively take care of all these issues while you're dealing with life. So I'm sure Carol is taking care of all that. She's updating them, communicating with them. So you're going to get those phone calls, those texts, that you're going to know what's going on throughout the process. But just find yourself a great professional that you trust, and then you can have someone like Carol take you through that process seamlessly.
Yep. So then once we have our closing disclosures that's been issued to the customer, he signed it, all good to go, then the documents go to the closers. The closer's the one that actually issued that paperwork. They're working in conjunction with the title company. Then they're going to send the closing package. It's the documents that they're going to sign at closing. Once the title company has those documents, they're going to schedule the time with the realtor and the buyer and the seller, and they're going to coordinate that time, and everybody's going to meet on that day. They're going to sign the documents. Once the documents are signed, the title company is going to send them back to us as the lender to get funding authorization. That means all monies have exchanged hands. You've signed everything. Here's your keys. Welcome to your home.
Yep. You're good to go.
Process.
Yeah.
Yep, you're good to go.
Well, that's awesome. Well, thank you, Carol. I really appreciate your time today.
You're very welcome.
Hopefully you guys have learned a ton about the process. If you have any additional questions, because listen, we're trying to keep these videos to a reasonable limit, just call Carol. I'll put all of her information down in the info below, and you can reach out to her anytime, and she'd be happy to help you with all your loan needs.
Thank you again.
All right, thanks, Carol. You guys have a great day and stay fired up.